Today is Monday, July the 29th, and you can see that the Dow finished up, but the other two markets finished slightly down. But basically, as we were expecting, there's going to be nothing happening in the market between now and Wednesday at 2 o'clock when the Fed makes its announcement. And Apple, of course, releases its earnings at 4:30 the same day. So 2.5 hours apart, we're going to have the Fed funds rate announcement, where it's expected to go down 0.25%, or else the market will go crazy in the wrong direction. But it's also expected to probably jump up further if it does go up that 0.25%. And of course, if it goes up 0.5%, well, sky's the limit. But we had mainly green today, but decliners led advancers by 55% to 40%, so fairly close. But that is going to take the market breadth and basically leave it right at the zero line. So we're right at neutral right now. Money is not moving out. The momentum for money moving out or into the market just isn't there right now. So let's take a look at some stocks. And let's take a look at the S&P on a 15-minute basis. Here's that trend line that we've been following. We'll see it a little bit better on a daily basis. This was our second touch. This was our third touch. This is when we attempted to break over the trend line but didn't. July 25th last week. Attempted to break over on the 26th, pulled back, and finished up Friday afternoon really quite high. But where did it come back to today? It came back to test that trend line, failed it once, and then tested it throughout the day and ended up slightly above the trend line. Trend line alert was around 3020, and that's right where we finished the day. So this is what it looks like on a daily basis, and we're sitting right on top of that trend line. So let's put our alert back up again. When it crosses the trend line or touches the trend line, I'm going to leave it crosses the trend line. So if it goes back, if it goes down, we're going to get an alert saying that it's pulled back below the trend line. But we still have that gap in place. Remember that gap. And that's where we're headed if the Fed disappoints traders. Apple, on a daily basis, tried to close the gap. Let's take a look at it on a 15-minute basis, and you'll see that we almost closed the gap. And what prevented it from doing that was the Woody's pivot. Resistance 2 at 210.61 was the high of the day, and we finished at 209.85. It was still a $2 increase for Apple as they head into earnings on Wednesday. I am going to be probably selling puts because I would like to own Apple, but I'd like to do it at a discount. The expected move for Apple is $8 to $9 at this point for Wednesday. We're going to look at the options a little bit more closely tomorrow and see what the expected move is. So right now it's plus or minus $8 is how the stock could move according to the people who set the prices in options trading. Caterpillar on the 15-minute. Let's go into the 1 day. Caterpillar had a nice day, stopped at the 8 EMA, and look where the Chiku span is. Just stopped exactly where the cloud is. So when you have this kind of coincidence where the cloud top for the Chiku span 26 days ago equals the 8 EMA today, that's a coincidence you can't ignore. And it presented point of resistance. So we're still below the 68.1%, but we've taken a sharp bounce off of the 38.2. We are headed to 136.60. Again, Fed fund rates cooperating. The GDX is in a bull flag, which usually breaks to the top side. So let's put an alert here. And when it crosses the channel top line, we're going to get an alert, and that would be an opportunity to start getting into gold again. Remember, if the dollar weakens, gold miners should benefit, and if interest rates go down, the dollar should weaken. But since other currencies are also weak because they've lowered their interest rates, don't expect much move from the dollar. The dollar should stay strong for the rest of the year. That would be my guess. So gold is not necessarily a good play. But if oil were to go down, then traders might move to gold. Gold, dollar, and oil to me is a triangle, and the three of them never move away from the center point at the same time. Whirlpool, we had this trend line which provided support. We've got a new trend line potentially setting up from this point to this point, and we're going to set an alert here when it touches the trend line. And I believe that now Whirlpool, again, Fed funds rate cooperating, I think that Whirlpool will blow through this trend line. But between now and tomorrow, 150.80, the trend line will be where it meets resistance. WDC had a, what do you call that? Sort of like an iron hanging cross, iron cross. Anyway, it's a very narrow, a very wide trading day, but a narrow distance between the open and the close. But 59.79, that 55.79, that stock is still strong. And look at how the 50 is picking up and is going to overtake the 200 EMA, and that's a bullish sign. Heading to occur probably beyond August the 14th, where the cloud inverts, is a good place to think that these two might cross at that point, and that would be a bullish signal. So what's in store for the S&P tomorrow? I believe that the high is in at 30.27. The high close was Friday at 30.26. I believe that is going to be our high tomorrow. And I expect that we're going to end up right on this trend line tomorrow until Wednesday.